So, hello, this is a session on social policy and economic growth, organized by the Center for Economic Studies of El Colegio de Mexico. So welcome to the session. I'm Peter Hammond at the University of Warwick. We have two talks by people, international bankers, which banks, which as far as I know, we haven't had to bail out recently, so with fewer problems and many. But let me not take up more of the speaker's time and yours. The plan is that Kaushik Basu will actually talk first and for about 20 or 25 minutes. Then Santiago Levy will talk next, also for 20 to 25 minutes. And the remainder of our hour and a half will be for discussion and questions from the floor and general discussion. So without more ado, let me introduce who is now the first speaker, Kaushik Basu from the World Bank.
Peter, thank you very much. So I thought what I'm going to do, this is a fairly open slate that has been given to me. So I'll tell you a little bit about the World Bank's own targets and mission statements, where we make an effort to marry concerns of social distribution with economic growth. And then I'll go into a couple of broad examples. I will draw on my own experience, which is largely the Indian experience in hands-on policymaking, and then listen to Santiago. Santiago and I go back a long way, lots of discussions, including some travels in the south of this country. So I know that though we will take on very different areas, there will be a lot of overlapping interest and a lot of agreement. I know in advance. There will be some minor disagreements, I like to believe, but yeah. So with that, let me tell you the World Bank's mission goals. The World Bank president, it's the new president of the World Bank, Jim Kim, decided soon after joining that the World Bank should specify very few mission goals, that this is what the World Bank is after. And when I joined the World Bank exactly a year and 1 month ago, the discussion was already on full swing. So it was a midstream participation in this, but on one aspect of it I did play a role. So let me tell you what the two mission goals are. The first one, which I will not spend much time because it has little to do with social policy and economic growth, but in keeping with what the World Bank has been trying to do for a very long time, which is a mitigation of acute and chronic poverty. And it was felt that what is new this time is we are probably in a position now to declare an end to this kind of poverty. This acute and chronic poverty is defined by the World Bank. The World Bank has been using this for quite some time, that an individual's consumption per day less than $1.25 PPP adjusted. There was a little bit of discussion. Should we keep it at the same line or change this line in tracking the poor? To that, my own response was that, you should track many things in life, but when you are doing an intertemporal tracking of a particular variable, it's best to keep the yardstick constant as long as you can, so you know what's happening over time. And if it was the case that with this low poverty line, very low poverty line, $1.25 a day, PPP adjusted in India works out to 50, 60 cents per day. Shockingly low line. People in India, for instance, would be very critical that how insulting that you draw a line so poor. To which the response is, let's look at the number of people below this poverty line. And worldwide, it turns out to be that there is roughly 1 billion people below this shockingly low poverty line. In India, there are between 200 and 300 million, depending on how you count, people below this poverty line. So first of all, there's a huge amount of problems still remaining. And then why change the yardstick? We continue with that. And the World Bank's first mission goal is end of chronic and acute poverty by 2030. But let me put that aside. The other one was where there was a lot of discussion about all the social things that you aspire for and growth. And there was one group of people saying that let's put growth as a target. Another was going in for another poverty line, the very poor with the vulnerable, draw another poverty line and track that. That's around the time when I joined, and my own view was to write down growth as another target for the World Bank in some ways is completely redundant, because growth is being followed by every country, their own growth. Per capita income growth, GDP growth, countries are tracking, the media is writing about it. You don't need the World Bank to energize that. Another poverty line drawn above the acute poverty line to me is using up the two goals not very fruitfully. So finally what the World Bank decided is that a term that the president had used a couple of times, that we should be after shared prosperity. What does shared prosperity mean? We had to give it a formal definition, and the formal definition, which must be statistically clear, we agreed on the definition that it is the growth rate of per capita income of the poorest 40% of the population in each country. You try to promote the growth of this. There were two criticisms, there are lots of criticisms of this. The World Bank has adopted this now formally by the Board of Governors in the spring meetings, so in April this year. So you can't get the goals to be changed. I would love to hear criticism, but what can we do within these goals? On the second goal, there were two criticisms which are of some relevance to us over here. One, and I'm going to put that aside very quickly, the group of people saying that, look, if you're tracking the growth rate of the per capita income of the bottom 40%, where is inequality, the concern about great inequality, which to me is a concern. There is too much inequality in the world, there should be less. Why aren't you directly talking about an inequality measure? To that, my, again, response is very simple. If you have the growth rate of the per capita income of the bottom 40%, and in another column growth rate of the per capita income of the overall population, yes, I could divide one by the other and create a ratio. But you can immediately see if your bottom 40% is doing worse than your average, and the implicit criticism in the bottom 40% doing worse than the average is there can still be interesting discussions. The Chinese could come to the table, the Indians could come to the table and say, yes, our bottom 40% is doing worse than our average, but our bottom 40% is doing better than in many other parts of the world. You can get engaged in discussion. But inequality to me is implicit in this, and I have to say, at least as far as I'm concerned, some amount of inequality there has to be in the world for efficiency, but the amount of inequality we see in the world today, to me, is an unacceptable level of inequality. Just far too much, and we should do something about it, and this goal was partly towards that. The second criticism which came, Amartya Sen very prominently in a small group saying this, which is where we connect very closely with this, saying that, development has many other dimensions rather than just per capita income, even of the bottom 40%, we know the concern. Malnutrition, literacy, various health indicators. Why not go for a multidimensional measure of poverty and track that? To that, my response, first of all, by the time Amartya came with this criticism, the goals had been declared, so we could not change the goals. But my response is the following. When you state something as a goal, if you interpret that is something we will pursue and other things we won't pursue, that's one interpretation of goals. And some people do take that view. The view that I take is that statement of a goal does not mean that you don't pursue other things. There are many other extremely important things. Climate, environmental matters, gender. Gender to me personally is extremely important. We discussed whether to put gender as another criterion in something, gender equality that we are after. People in the World Bank would very often say, some people, that look, gender equality is good economics. Therefore, we should go for gender equality. To that, my response is actually whether or not gender equality is good economics, it's a good end in itself. So we should go after that. But we have not written that down in that goal. But there are many other areas, other social dimensions where we do want to research, we do want to push on all those fronts. That's the plan. Now let me tell you one broad general in India. This has been very heavily debated. Social policy and economic growth. These two very often get pitted against one another. Are you in favor of good social interventions? Are you in favor of growth? As if that's a straight line downward sloping, that if you push more on one, you will push less on the other. But I personally feel there aren't actually that many trade-offs. Intelligently done, good social policy actually promotes growth. Growth does not always promote good social interaction and atmosphere, but you can also get that. But the point is that you need to work on both fronts. And in life, I'm going into broader areas, you can see the social side of life and economic performance, variety of studies which show that there is a lot of interconnection between the two. One of the most, for me, influential is Francis Fukuyama. Fukuyama did it in very broad brush description, saying that societies in which there is a lot of trust among people, those societies tend to do better economically. They get faster economic growth. People immediately react to that because, of course, some societies have and we are talking in terms of anonymous trust. Virtually all societies have a lot of trust among their people, family members, extended family, social group, there's a lot of trust. But anonymous individuals is their widespread trust. That social characteristic helps a society grow fast. People object to this because this, at times it appears like a politically incorrect discussion because some societies don't have a lot of trust. India, where I come from, anonymous trust is not high. Trust in closed groups is very high, but anonymous trust is not high. To me, this is not a politically incorrect topic at all because I don't think these things are genetically hardwired into human beings. Human beings are fundamentally very, very similar. In fact, for me, a lesson in that was when that was the trip with Santiago I was mentioning, when I spent 3 days with a Zapotec family in just outside of Oaxaca. And the first day with that family, I felt as alien as can be. An Indian living in United States with a family where there was no language, their culture was different, norms were different. But at the end of the third day, there was a feeling of warmth, which made me feel emotional because commonnesses, the jokes at dinner time were similar jokes. The little bits of tension between the mother-in-law and the daughter-in-law felt very universal. So in the end, you realize the world is very, very similar fundamentally, though through experience we've become different. So even traits, social traits like trust, punctuality, across societies have become different because of your history, because of your experience. You've had to use one kind of strategy to survive during a colonial period, and that becomes a part of your society. But these things change. We've got one more World Bank remark I should make. The next World Development Report, not the one we will discuss tomorrow, is on the social and behavioral foundations of economic development, precisely because of the belief that there is a big interconnection between the two. Let me use, I'm just choosing
about 10 minutes.
10 minutes more. So I wanted to give you one or two examples where I think I will connect with what Santiago will also say. But let me give you one more on the topic that I've touched, and I will finish in 10 minutes. Punctuality, again, is of interest to me. I worked on a paper with Jürgen Weibel on punctuality. And it was a great fun working on this paper because we were doing a lot of research, found nothing written by economists, but lots written by sociologists, social psychologists, and a lot of very interesting discussions, comparisons of Latin American punctuality and North American punctuality. And I won't have to tell you which society is more punctual than which. There were differences. There were also a fascinating study, this is by a social psychologist, of watches in Brazil. Watches in Brazil, whether they are well coordinated or not, they had gone around studying, and they found that watch coordination in Brazil is a little worse than in the United States. So someone's watch will say 5 minutes past 3, someone's will say 5 minutes to 3, etc. So some variation in timings. United States, much greater coordination in watch timings. When we were doing this research, I felt like checking what is the Indian fact of watches. Are the watches all same time or different time? I could not get any data, but there was one data point experience, which for me was very telling. While we were working on this paper, I went to India, and when I got down at the airport, a man came up to me and wanted to ask the time. What is the time? And he asked in a way which is a very standard Indian way of asking for time. He said, "Excuse me, sir, can you tell me the time by your watch?" And I thought, I don't need to do any more research. The fact that this is a part of language means there's this recognition that time has a watch dependence in India. So it must be like Latin America, our times differ a little bit. Fascinating study, but in the end, we again reached a conclusion, and that's our paper, that societies are fundamentally very similar. Over here, it's not history. You get into collective traps of behavior, collectively groups, because it's rational for you to behave in one way if another person behaves in a certain way. And so societies get into these behavioral traps. So you could be genetically completely identical groups of societies behaving very, very differently. So I feel this is a topic that is worthwhile, important to go into, and we should do so. I know I'm being a bit jumping from one topic to another, but I want to give you a little bit from my direct hands-on policy and debate experience when I was in India. You know, what happens, I think, in many emerging economies, developing countries, there is now a very strident debate division between one group, do your economic policy, hard-nosed economic policy, don't worry about the social side of things, everything will be taken care of. And there's another group arguing about good social interventions, how you should do that nicely. There is a very recent book by Jean Reyes and Amartya Sen on India, which actually talks to this problem. This would come up in one area where I know Santiago has some interest, is labor policy. You know, here the debate got very divided in India because India's labor laws are, on the face of it, this is my view, very pro-labor. But I think if you look at it deep down, it is not really pro-labor. It does not help labor a lot. A lot of these laws are written down by giving workers plenty of rights. Once you've got a job, it's very difficult for a firm to dismiss these workers. These are actually for firms with more than 100 workers that these laws apply. At first sight, it looks like a very pro-worker, that you cannot dismiss your workers. But you have to think in terms of equilibrium and intelligent employers. In fact, the year in which this law was brought in, the data shows that between the previous year and the next year, number of firms, the number of people working in firms with more than 100 employees dropped suddenly. So what firms did was employ less than 100 people, because if you have more than 100 people, these rights kick in. And when I was advisor to the Indian government, I would go to the Indian garment sector, and there would be entrepreneurs. I'm sure they were interested in nothing but their own profit, but what they said to me made sense. They said, you know, the garment industry in New York, which we supply to, is very volatile in terms of fashion. Suddenly you hear that there is a fashion for special yellow shirts of a certain kind. The only way to respond is employ more workers, produce this in a rush, send it all off to the United States. But the Indian law means you're then stuck with these workers. You won't be able to downsize. And these people would tell me that in the end, even when there was a sudden rush of demand, we would not expand our labor force, simply because we knew that we would not be able to downsize. What's the right way to go about? Something that I argued several times but never got my way is that we should make actually greater flexibility in the labor laws, allowing downsizing, upsizing, etc. And more than that, you don't want to give all the rights to the employers, but you want to give contractual variations, different kinds of contracts. But what you have to couple that with is a minimal social welfare system, whereby you have a right to these welfare support workers, no matter where you are, in which job you're in. Then you don't cling to your job, because you know if you're unemployed, the state is going to come and provide you with some support. So give that support, so let there be social welfare interventions from the government on this, but allow the labor market to go more flexible. India, despite the fact that the country has grown extremely well over the last 1 year, it's doing badly, but right from 1994, the country has grown extremely well. But one sector which has not grown well is manufacturing. In fact, India's manufacturing is holding roughly constant of value-added GDP. About 15% is the manufacturing sector, 15, which is shockingly low. The services sector, which is not labor-intensive, is growing in leaps and bounds. Agricultural sector is shrinking, as happens during development, but shrinking slowly. But the manufacturing sector, where you can employ people, is not growing. And one of the things I think is to do with that we don't have good enough social policies for workers who are out of employment, and we have a lot of policies to protect worker rights seemingly when they are employed. Correcting for this, going for a balance of this would be very useful. And just the last point is, there's a lot of cross-country work to be done on this, because Latin America, which used to be, in terms of inequality, one of the worst inequality indicators in Gini or however you measured, Latin America used to be the case. Over the last 10, 15 years, Latin America has made huge strides in this. There are social welfare programs which are very imaginative programs, from Progresa in Mexico to programs in Brazil. There are important questions about these programs, and I occasionally get a lot of criticism. Brazil's growth rate has slowed down, and there are some Brazilian economists who are telling me that, you know, you all praise the social welfare programs of Brazil, but one of the reasons why the growth rate could have slowed down is some of these social welfare programs are eating into growth. These are possible. We have to have our eyes open to this. In fact, when I used to do my Indian work for the Indian government, every now and then I would try to get from the World Bank office data on what's happening in Latin America in terms of the social welfare program, so that we could pinch some good ideas and put them to employ. This, in brief, is an open, big terrain, a lot to be gained. In fact, well-done social welfare policies could actually promote and boost growth, but there is research to be done, and there is a lot of policy innovation and intervention to be done. With that, let me stop. Thank you very much.
So, Kaushik, thank you very much. Your watch was clearly set very well. So let me pass things over directly to the second speaker, Santiago Levy from the Inter-American Development Bank.
Thank you, Peter, and thank you to the Colegio de Mexico for this invited lecture. Let me begin by saying that it's great to share the speaking arrangement with Kaushik. Great friend for a long, long time, and we've shared some really nice experiences. The one that we're describing in Oaxaca was great fun about 3 years ago. And it's really very nice, Kaushik, and it's lovely to see you here at LACEA, and we hope to see you in many more LACEAs to come. So lovely to have you here. Kaushik and I spoke a little bit about how to divide the lecture, and Kaushik would speak a little bit more about the World Bank view. He shared that with us, and perhaps it made sense that I focus more on Latin America, and since that's sort of the area where I'm working today. This is mostly based on a paper that came out on the Journal of Economic Perspectives with Norbert Schady a couple of months ago. And it's difficult to focus with a very sharp conceptual framework on the relationship between social policy and economic growth, because there's so many interactions going in so many different ways. It goes in very many directions. So what I want to do is I'll focus basically on 3 broad areas that I think matter for the relationship between social policy and economic growth. I'll speak a little bit about human capital. I'll speak somewhat about social insurance and labor markets, and then I want to speak a little bit about transfer programs and poverty alleviation programs. Before I begin, the good news. The good news is that, so if you look at the last 15 years, there are really some good news to share. I mean, Latin America, the share of the population living in poverty with the $2.5 a day, the double the number that Kaushik was mentioning, came down for the region as a whole from 28 to 13%. The Gini coefficient came down from 0.55 to 0.5. Years of schooling have gone up, about a year per decade for the working population. Infant mortality is coming down. Pretty much any social indicator that you look at for poverty, education, has improved over the last 15 years. So there really are good news, and that's sort of the starting point. This is a combination, we would like to think, at least partly of a result of good policies, certainly of good macro, and a bit of good luck. Because the world international environment has been extremely generous to Latin America, particularly over the last decade. And I'll close my remarks by noting that if we look to the future, it's not so obvious that the world will be so generous to the region, and that perhaps that things have to go. The main point of my talk will be to argue that despite the good news, more of the same will not do. And that continuing along the line of policy that the region has been pushing over the last 15 years would be a mistake, and I want to argue for changing in some dimensions of social policy. So the 3 areas that I spoke about, human capital, social insurance, and poverty programs and transfers, before I speak about the 3, let me put them in context. If you think about growth in Latin America and compare the region with other regions of the world, the distinctive feature of the region is that even though all these indicators have been doing well on the social side, the growth indicators over the longer view are not so good. They're not so good if you compare them with other regions of the world, particularly East Asia. Even in this decade that was particularly good for Latin America, associated with the China boom and the commodity prices boom and very, very spectacular conditions in international capital markets, the growth rates are higher than the previous growth rates, but they're not spectacular. And if you ask yourself questions why, the main reason behind that is not because the savings rate in Latin America is that low or because human capital accumulation is that much lower than other parts of the world. It is mostly because productivity growth has been low. If you look at numbers for the period 1980 to 2010, total factor productivity growth in Latin America for the region as a whole practically stagnated. And this is very much true also country by country. Almost every country that we look at, productivity growth over the last 30 years has stagnated. If you look at East Asia, over the same period, productivity growth increased by 60%. And if you look at the United States, productivity growth increased by 20%. So there's a huge gap. We don't really understand why, at least I don't understand why, but I will argue that social policy has to do, part of the explanation of this has to do with social policy. So let me begin now with that context, speaking about human capital. I'll divide that in two, schooling, and then I want to talk a little bit about human capital in the workforce, in labor training. Great progress on enrollment rates and repetition rates and any almost indicator of coverage that you look at for Latin America over the last decades, great coverage. The bad news comes in when you ask questions about the quality of education. When you speak about the quality of education, the performance of Latin America is pretty dismal. And I'm not exaggerating when I use the word dismal. If you look at the PISA scores, and we don't have PISA scores for most countries in Latin America, but we do have for Argentina, for Brazil, for Chile, for Panama, for Peru, and for Uruguay. Among all these set of countries, the best performers are Chile and Uruguay. If you compare Chile with Singapore, only 5% of Chilean students will score as well as 50% of the students in Singapore. And only 1.5% of students in Chile will score as well as 50% of the students in Shanghai. And even if you take the top cream of the students and you say, let me just look at the PISA scores at the top part of the distribution for the ones with the highest income levels, those numbers don't change that much. Then in that case, you're looking at the best trained students in Chile, or the best schools in Chile, only about 10% of the students there will score as well as the average of all the students in Singapore and Shanghai. So one first link that comes to mind in which we need to change is clearly issues of quality of education need to be put at the forefront. There's a complex link between the quality of education and productivity. There are papers by Hanušek and other people that claim that a great part of the gap in productivity that I was mentioning before is explained indeed by human capital considerations. I have some qualms with those papers, but nobody would quibble with the fact that if the quality of your human capital is not what it should be, you're not going to get the dynamic innovation and the sort of dynamic economies that you're going to need to sustain long-run growth. So first dimension is quality of education. For that, I think policy needs to focus a lot more in issues of early child development. Our generation of programs that focused on nutrition, the conditional cash transfer programs, paid little attention to that. And I think a lot more attention has to be focused on that, and a lot more attention has to be focused on issues of quality of teachers. Many of you here in this room have contributed to those papers. Many of you have produced for that. And that's an active area of research. A second area of research, which I think is somewhat underestimated in my view, has to do with the fact that we tend to associate measures of human capital with schooling, and we tend to think about human capital and schooling and look at quality of schooling, and we're talking here between, I don't know, ages 3 to ages 18, maybe ages 24. But even if Latin America did a wonderfully successful educational reform, and as of tomorrow morning the quality of education began to improve, it's going to take quite some time before that permeates into the economy, because the cohorts of people will begin to move year by year by year by year. The fact of the matter is that the stock of the labor force that you currently have there is the stock of the labor force that's going to be there for the next 20 to 30 years as various cohorts retire and the new cohorts come in. And so there are issues there about what is it that you can gain in terms of human capital with the current labor force, which is not going to benefit from improvements in schooling programs. But there's a lot of space for them to acquire skills. And we don't know enough and we don't understand enough here as to skill acquisition and acquisition of human capital in the jobs. This is, I suggest for this crowd in LACEA, an area that should receive a lot more attention. We tend to think of skills as a scalar that is measured somehow. In many papers, we tend to associate skills with the PISA score. We have very little data about measurement of skills for the labor force. There are these PICA numbers that are about to come out, but we don't even have them. And if you wrote a function of skills production, you would say, well, yeah, I'm going to write skills production as a function of schooling, but also type of job. Clearly, if you didn't get a lot of schooling, you're not going to be a NASA engineer. But it's also the case that if you have 4 or 5 years of school, or 7 years of school, which is about the average for a Latin American worker, it does matter whether you come in and out of jobs continuously, erratically during your life cycle as a worker, or you enter into a stable job, and there you're trained by the firm, you can acquire skills, and then throughout your life skills, you can make up for some of the skills that you didn't get in schooling. So I think there's a lot of potential gains and a lot of good things that social policy understood of human capital formation, in particular the ages from 25 to 45 or ages to 25 to 50, could do to promote economic growth, which is not a substitute but a complement to the huge effort that needs to be done in the quality of schooling. As I speak about jobs, leads me naturally to the second area that I wanted to focus about, which was labor markets and social insurance. Social insurance is a big component of social policy in Latin America. I don't know, maybe this is something to distinguish from Africa. From India, I don't know enough about those other areas, but certainly it's a big component. If you think about the amount of money that governments spend on this, on pensions and health and all that, it is big. And of course, in Latin America, when you speak about social insurance, the elephant in the room is the segmentation of social insurance and the informal sector. So a couple of numbers. 55% of the labor force of the region is in the informal sector. You have some outliers that have a very small informal sector, Chile and Uruguay, but these are the outliers. Even large countries like Brazil, Mexico will have about half of the labor force in the informal sector, and other countries 60 to 70%. Large share of informal firms, which goes together with informal employment. And by some measures, and there's some reports coming out, Eduardo Lora has a book coming out on that, I think the CAF has a report on that, I think the World Bank LACS reports on that. Too many people that should be salaried employees being either entrepreneurs or excessive entrepreneurship, excessive self-employment. So this has to do something with social insurance, and has to do something, if we properly understand social insurance, as incorporating what some other people label labor regulations, but I don't like to label them labor regulations, the sort of things that Kaushik was speaking about tenure in the job and all that, are really social insurance because we don't have proper unemployment insurance, and they're substituting for the protection for output shocks. So there's big discussion about informality in the area. If you rule out a genetic explanation, if you rule out that the Latin American DNA has an extra chromosome that generates informality, this has to do with incentives. This has to do with the set of incentives that workers and firms face. And these incentives are multiple. They can come incentives from the tax side, they can come incentives from the area of credit, they can come incentives from transaction costs and whatnot. But clearly, workers and firms face incentives in the labor market that are very much affected by the structure of social insurance, including labor regulations. And so social insurance has to do with informality. This matters a lot for growth, and this is a second big link. I spoke earlier about the human capital. Matters a lot for growth because there's plenty of evidence that productivity in the informal sector is less than productivity in the formal sector. I mean, just write, TFP is alpha of TFP in the formal sector plus 1 minus alpha of TFP in the informal sector. And if 1 minus alpha is big, even if you have a very dynamic formal sector, you have a huge drag on TFP growth in the whole economy because you have a large informal sector that's dragging everything down. So understanding now the links between social insurance, informality, and productivity becomes central from understanding to what extent social policy contributes or doesn't contribute, in fact hinders, productivity growth and therefore economic growth in the region. And this has to do a lot with the dichotomous or segmented structure of social insurance. As we all know, the formal guys pay social insurance from wage-based taxes. This is called contributory. The informal guys don't get formal insurance from this wage-based taxes, but increasingly in the region, they get substitute health, pension, and other related programs that are paid from general revenues. Depending on parameters of workers' valuations for the structure of these programs, and depending on the way, how much fluidity is in the market, this, what we'll do is we'll translate into a structure of taxes on formality and subsidies to informality. This is very bad social policy, because if workers are transiting between the formal and the informal sector, sometimes they're covered by some risks and sometimes they're not covered by some risks. The same guy with the same human capital, sometimes protected, sometimes not. Very bad for pensions, because people only save part of the working life. Replacements are going to be low. But also very bad for growth and productivity. Many people in this room have written papers now, and there's an increasing amount of accumulating evidence from randomized controls and very well done papers that do show that these non-contributory programs, either on pensions or on health, are affecting worker and firms' choices, and de facto are having a positive impact on informal employment. So that there's a reallocation of factors of production exactly in the direction in which you don't want to go. There are nice papers for Colombia, there are nice papers for Mexico, there's some nice papers from Argentina, I don't have time to quote them, but there's a growing literature that says, yes, indeed, this is not a theoretical presupposition. The empirical evidence that we're beginning to collect shows that this is there. And this brings then an area in which social policy, in this particular case social insurance, matters a lot for growth. And we have this dilemma in which, yes, we are providing health benefits to people who otherwise would not have them, and this is important and this is good and welcome. Yes, we're providing coverage against old age poverty. This is again good and welcome. It's also reducing inequality, which is welcome as well. But it is coming at some productivity cost that maybe the region cannot reinforce. And the question here is whether changes in social policy, and that's why I'm arguing for that, in this particular case in social insurance, need to be seen through the future as functioning in a different mechanism if we want to increase productivity growth and ensure that this is more sustainable in the medium term. There are also potential negative effects, and another area that I think has received not so much attention and I think should be put back on the agenda of research, and hopefully some people here in LACEA can do some work on that as well, which is savings. A lot of work on savings in Latin America in the early 1990s when Latin America was doing the pension reforms, going from the pay-as-you-go to the defined contribution systems. A lot of questions whether it was recorded equivalence or no one-to-one, and it was offset or not going to be offset. And then kind of that has sort of faded a little bit. But we're still left with pension systems in which only 30, 40, 50% of the labor force is being forced to save. If there's no one-to-one recorded equivalence, and in fact the offset is not one from savings to voluntary savings, then there must be some impact on aggregate savings. And we don't know enough as to whether all these non-contributory pensions that are providing pensions for people who never saved, what are they doing to the incentives to save, and what are they doing to aggregate savings? And savings matter for growth unless you have in your mind a model in which, full capital mobility and all that, which is not the world in which Latin America has been inhabiting over the last 30 years, is a very different world. So savings is yet another channel, aside from factor reallocation, in which we need to think differently if we want to increase the volume of savings, particularly if we think that in the next decade, the world is not going to be as generous to Latin America as it has been, and access to international capital markets is not going to be on easiest terms as it has been over the past. To sum up the issue in social insurance, there's an interaction there between human capital, schooling plus labor skills, distribution of skills, incentives providing from social insurance, and other factors that is generating a size distribution of firm and a type distribution of firm which is very little conducive to economic growth. And that is the area that I think needs to change as we look forward. Let me move on to the third area which I think is relevant on social policy, which has to do with transfers and poverty alleviation programs. CCTs was a Latin American innovation, these transfer programs. I think the balance of the evidence that has been collected from many RCTs and similar exercises is clearly positive that these transfer programs have worked well in reducing income poverty, and they've had a positive impact on some dimensions of human capital, and this is as it was thought as an investment in the human capital of the poor that would eventually allow them to enter into the labor market in better conditions. The evidence that we have as to what is happening to deeper indications of human capital are not so good. Yes, children are going more to school. It's not obvious they're learning more. And they're acquiring really more cognitive skills. More work needs to be done on the supply, and I think attention needs to be shifted from just the transfer to the quality of the services that is being given, particularly the educational service and the health services. But more importantly, I think we haven't thought enough about the incentive compatibility issues that arise between transfer programs and social insurance programs. So let me give you my perfect caricature of what I think when CCTs were thought about 15 years ago we're going to do. They were going to ensure that the mother during pregnancy was well fed, so that the child had the right weight at birth, and that through nutritional supplements and medical attention, that baby was not going to suffer nutrition, and was going to be moving along and then enrolling in school, and with school scholarship is going to enter and end up at age 18, now with more years of schooling compared to his parents. And that these investments in human capital in the poor through the CCTs were going to yield a higher return. But now they're entering into a labor market that is increasingly distorted by social insurance. And in particular, if non-contributory social insurance programs targeted to some extent on the poor induce them more into the informal sector, the expected returns to the investments in education are probably not going to materialize. We're now at the point in which the cohorts of various generations of CCTs are entering the labor market. These programs began in 97, 98 in Colombia, Mexico, Brazil at different points. And now we can begin to pick up whether these programs are having the effect that they should be having. And I hope I'm wrong. I'm not optimistic that, in fact, these investments are going to translate into higher returns, but this is an area of research. But the point I'm bringing here is the incentive compatibility of these programs need to be thought. And this is yet another link between productivity and growth. We also need more research on what is the impact of all these programs on participation rates. If you look at some of these programs, the size of the transfers in some countries in the region has increased importantly over the last few years. Transfers now are in some cases 30, 40% of family household income. Something must happen to labor leisure choices and to participation rates when you're having such high transfers. And he speaks about some limit at some point that you can reach when you're hitting about redistribution. One last point about transfers, and I'll connect a little bit to the lecture of this morning from Kaushik. They've benefited immensely from all these randomized controlled trials, but we've put a lot of attention on evaluating individual programs. When I speak about the incentive compatibility between an individual CCT and then a non-contributory program in health, or a non-contributory program in pensions, and a contributory program in health or in pensions that taxes formal employment, what I'm speaking about here is that there's an incentive compatibility between the two things, and we should evaluate the whole thing and not the individual program. And we need to develop methodologies. It's not easy, and I don't think RCTs are going to be the answer to this, and I very much agree with your remarks this morning. We're going to need to develop new methodologies to evaluate these things. So I conclude. 1995 to 2010, 2011, a success story in social policy in Latin America, and I think this is all to the good. Some of it associated with good luck. Not clear that this will be the years ahead. But I think that more of the same would not do. I don't think we can just continue increasing transfers, increasing the coverage of these programs. I don't think that more non-contributory pensions or non-contributory health. I need to think about new architecture of social insurance, and we have to think about new methods of investing in human capital if social policy indeed is going to make the contribution to growth that it won't be. If growth in the decades, in the next decade, is not so fast in Latin America for regions alien to the region, because China slows down or whatever you want, commodity prices slow down, we need to begin to think about the fiscal sustainability of all this. And unless there's economic growth, even the social policy that we've laid out, in some cases and at some point, is going to begin to hit fiscal constraints that's going to make it sustainable. So if only for fiscal reasons, we need to begin to change, but for deeper reasons, we need to change, because now we need to move into a social policy that is more focused on productivity, more focused on incentives, and more focused on determinants of long-term growth. Stop. Thank you.
Thank you very much. So, now we proceed to questions. I guess free for all, anybody can ask a question of either speaker, or do you want to interact first, or turn it over to you?
Yeah.
Yes.
I may come back later.
Gentleman there in the blue shirt. Do we have a microphone for the audience?
Thank you. Santiago, you were mentioning that, and I think this is very clear given all we know about standardized tests in the region, that
We know about
the standardized test in the region, we know that kids in school are not learning as much as we would like them to learn. And that presents a challenge because then we're going to have workers without the required skills to improve productivity in the labor market in the future. My question is, how do we think it was in the past? So a child, the average child that goes to school in Peru today, do we think he or she is learning more than a child that was in school in the 70s or the 80s? Is it the case that the general learning is going down? Or is it just the case that now we know that schools are not providing the right tools to learn? Because in part, we didn't have data on standardized tests in the 70s or the 80s or the 60s, right? So I'm trying to understand whether we're thinking that the future is going to be worse than what the future looked like in the 70s, or it's just that we have now the learning or the knowledge that kids are not learning much in school.
Do you want to reply?
whichever way you want, Peter. You want to collect? Or you want to reply?
In many ways, it's probably easier to reply to the questions as and when they come.
So I don't know the answer to your question. Precisely for the reason that you mentioned, we don't have good data. I mean, if we had a time series of PISA scores, then we're there, we're home. We don't have a time series of PISA scores, so I can't tell whether the quality of education today is actually worse or better than the quality of education. I'd like to think that it's better, but I can't really sustain that. But I do know that relative to the countries that I mentioned before, is not what it used to be. Maybe in the past, it didn't matter. It mattered less than it matters today, because in the 60s, the 70s, through the 80s, workers in Peru were competing with other workers in Peru. Now workers in Peru are competing with workers worldwide. We're in much more open economies, and that, our productivity is being tested vis-a-vis the productivity of the rest of the world, so it matters more before. I think on balance, there's more accumulation of human capital today than before, because what we do know is that they have more years of schooling. I mean, the average worker in Peru today probably has, I'm guessing the Peruvian numbers, but probably 4 more years than 35, 40 years ago of schooling. It's hard to think that the quality has deteriorated so much that it has more than offset the more years of schooling. So one would like to think that there's more human capital by this metric than before, but we don't have good numbers.
I suppose it's possible that Peruvian standards are rising, but rising not nearly as fast as they are in Singapore.
Yeah.
Yes.
What would be the reason that the Ptf is flat in Latin America for the recent years, or at least I think for the last 2 or 3 decades?
So this is the $64,000 question. At least I don't have a good explanation. I don't have a complete explanation.
Because, according to the last question, if education is better than it used to be, probably Ptf could be better than what it is today. So probably the answer has to do with that trend in education. I don't think that education is better now than it used to be. It's my personal point of view.
I think there are many reasons why the Ptf has stagnated. I mean, clearly the crisis, the macro crisis that the region suffered along the line, up until 10, 15 years ago, a lot of capital destruction and a lot of uncertainty. People's investment horizons shortened. There are many reasons behind. More recently, I put a lot of weight, in my own view, I put a lot of weight on what happens in the labor market. If you look at series of informality, it's very persistent, and it's very troublesome, because you would expect that these would be declining rates of both informality of firms and workers. It's not happening. And it's not happening despite the fact that people are accumulating more years of schooling. So I go back, these incentives are not properly aligned.
This is a question for Mr. Basu. A few years ago, I had the chance to study regulations in India, and precisely seeing that they are, in many ways, more stringent than in many other places in the world. So I was very curious to know your exchanges with the government. What are the reasons that are keeping regulations as they are, and why this change towards sort of a different social contract with more social protection and less regulations is not possible in India?
It's a very interesting question. Some of the over-regulation, which has a very obvious harmful effect, why do they persist? During my time at the government, one insider's view I got is that, the top policymakers, I think, see this fairly clearly. And this is, of course, true globally, because it's education now at the top is so common that they are thinking along very similar lines. But to get, in an electoral system, to get popular support is not easy when mass opinion is very different. And I think that there's something very crucial about economic literacy. Understanding some of these arguments broadly in society, I think, is extremely important, because politicians in the end are looking out for votes, so they don't want to push in for policies which will not give them that. So this, only after joining government, I realized that at the top, very often the understanding is very common. I'll give you from another area. Petrol price, which in India used to be kept very controlled, so way below the international prices, subsidized and people overusing. And every time you have an internal discussion at the top, you see policymakers fully understand that this is just not good for the economy. But they would rightly say that as soon as we declare this, there's going to be a truckers' strike all over India. We are not in a position to be able to handle that. It would stop for that. But there's a bit more important thing to be kept in mind. Civil society activists. I actually, among people in government, I think I had more friends among civil society activists. A lot of the time I would argue with them, taking different positions. These are very intelligent, well-educated people. They would also very often oppose any of these regulatory changes. There, I think, somehow over time, human beings have got into a little bit of camp. Anyone who says that, look, change these regulations, make them a bit more flexible, immediately a sort of warning bell goes out that this person is pushing for complete free market, no intervention, let the poor go down. That it's very difficult to persuade them that, look, I don't belong to that camp. But I feel you have to go for more flexibility, other kinds of support instead of the kind that you're going. But we do compartmentalize. So there are words which immediately you categorize people and their views, and you can see that also they are worried. Food subsidy in India, which is given directly in the form of reduced price for food. This causes lots of distortions, because once you try to lower the price of food to give the subsidy, you'll sell it off on the market at higher price and not given to the poor, all this happens. As soon as you argue that don't try to give the subsidy by lowering the price of food, give the subsidy directly to the poor and let them buy it at market price. Some people immediately think that this is really a plan for, in the long run, removing support to the poor altogether. And which is also true that there are some market fundamentalist economists who would like to go that way, where you don't provide no support. So this does make it very difficult for pushing through some of these policies, which are otherwise very rational, I think.
Gentleman at the back there.
This is a question, I think, potentially for both speakers, in that it relates to the trade-offs that Santiago mentioned, but also to aspects of shared prosperity. And that is that when I came into a talk about social protection and economic growth, I expected, and particularly knowing the speakers, I expected references to the trade-offs and the efficiency costs of redistribution. But I also expected references to, a discussion that's 20 years old, if not older, about how social protection can sometimes help break poverty traps and promote efficiency. So, Abhijit Banerjee, pre-RCT, Roland Benabou, lots of theoretical papers that I know you all know well about how efficient redistribution was a theoretical possibility. And now one of my favorite recent papers is Paul Gertler and Martinez and Rubio in the AEJ Applied, the paper that begins with that quote about how that lady from Progressa, got this, or the family got the Progressa money, and then they bought a chicken coop, and had some chickens, and then have some eggs, and they sold the eggs. And I looked at TASAF in Tanzania, which is another CCT, and lo and behold, they're buying more goats, the treatment people, vis-a-vis the control people. And I've recently argued in the context of Africa that if we're interested in shared prosperity or in growth in the bottom, these chicken coops and goats are more important than the big, shiny new airports and oil platforms. And, I think that there's a question of measuring. Isn't there a research agenda on measuring the potential benefits that social protection generates in terms of those investments and growth at the bottom that we can then relate to the other costs? The costs you are mentioning, I'm sure exist, and we should measure them. But I don't know that we're making sufficient progress in measuring, quantifying the benefits that they may be generating for growth at the very bottom. Thank you.
You want to take that?
I have one brief comment. Let me then make that. I'm assuming you're referring to the Banerjee-Newman kind of paper and Gallor-Zira kind of paper. I think that's actually very important. And Martin Ravallion also has recently done some work on that you get to create traps at the bottom. And as soon as you have traps at the bottom, there is a certain critical amount of support that you have to provide. In fact, a very small support will be dissipated because you'll get sucked back into the trap. It would be wasted money. Whereas if you can go above a certain amount, you unleash the energy and growth takes place. I think that is important, and I think actually this is the kind of thing where hard empirical evidence is difficult to produce. But this is the reason why countries which stagnate for a long time and then something happens in the structure and escape, and then you get a period of great escape from that, I think it's testimony to these traps at work. So no, all I will say that these are important, and this is the reason why I was saying earlier that these equality, social interventions and growth are not counterpoised but can go together. In some situations they do work against one another, but this is exactly the kind of situation where they go together. You intervene for social equality, better social interventions, and if you do it at a certain critical mass, intelligently designed, you unleash growth and get a greater growth for entire society.
And I think Chico raised a very nice point, but the way I would think of it is those gains are there. I mean, those effects that you're speaking about are true and they're really important. But, and again, this varies from country to country, but you've already achieved them, so to speak. So I'm not arguing remove the program, but don't do more of that program. Now, take the woman who gets the transfer and now can save a little bit and can start her little chicken business or whatever. Now that she's got those transfers, great. I'm not saying take them away, but what she really needs now, at the margin, is a growing economy where her chicken business can now flourish more. That's my point. So it's more of the same will not do, doesn't mean undo the previous. It's just at the margin, that route will enter quickly diminishing returns, and trade-offs on participation rates, labor leisure choices, formal, informal choices are going to get steeper, so move in a different route. And also, Chico, some of these people will go into entrepreneurs and some should join the labor market. Because now the capital that they have is more in the form of human capital. And what is best for them is a labor market that functions better. That's the point that I'm trying to make. Without minimizing by now, 2013, inframarginal gains that in 1995, 1997 were gains to be had. That's my point.
I just want to slip in one remark on this. And Chico, when I was saying these are empirically hard to establish, I just remembered One of them is here in the conference. Andre Portela Souza and Patrick Emerson, they have this study based on Brazilian data, which actually in economic development and cultural change, which is a very nice empirical support of the fact that there are precisely these kinds of traps.
Yes.
I just wanted to go back to the productivity issue. And I don't disagree with anything you said, but I think the burden on social insurance and social policy is a bit heavy. There's a whole host of policies that Latin American governments have been unwilling to implement so far in terms of structural reforms to make it easy to set up a formal business, removing red tape, and all sorts, all that area, which really would make the system a bit more resilient to all these external changes in commodity prices, etc. Stronger institutions that would also make the countries a bit less prone to procyclical policies. That whole aspect also should be taken into account. Again, I agree with what you said, but you place the burden very heavy on social policy, and I think there's probably a lot of good things about social policy. I agree with the point about incentives, but there's a whole load of other things that I haven't heard in the talks this morning anything about structural reforms and boosting productivity. I heard a lot about what happens if QE stops or, commodity prices change, but what happens with all the reforms that must come from the countries themselves?
No, you're right. These incentives that is producing stagnating TFP come from many areas, right? There are issues of credit and the way credit markets work, and there's some things, clearly a lot of things that would need to be there. Tax regimes that sometimes induce firms into very small sizes, these small tax regimes, where they generate discontinuities in the profit functions, registration costs. There are a whole bunch of other things that are there which intermingle with social insurance. And the relative weight of these probably varies from country to country. The point that I'm making is not don't work on those, but if you think about social policy, make sure that social policy works in the right direction. And this is not something that will stay steady. This is something that the politics of it, quite understandably, to increase and improve coverages of health, of pensions, and other, housing and all that, are such that unless the architecture is fixed, you will deepen the distortions. That's my point. It won't stay steady.
Thank you. Any other questions? Yes.
Let me go back to the question of rules and punctuality. You mentioned the clocks and so forth. There was a book by David Lander, I think around 30 years ago, that connected the Industrial Revolution with punctuality, that people learn to be punctual and so. And I remember General Park in Korea, I think in 1967, started making speeches about punctuality because Koreans were not punctual. And progressively they learned to be punctual. Now, my question is, should the leaders focus on some general rules that should try and disrupt? A country like Singapore and Korea and Sweden and Germany, the successful countries, all have the same characteristics. They follow rules. And the rules, they don't have to be the general rules of budget deficit. We are talking about punctuality, about observing rules on the roads and so forth. Is there a connection between? I don't know whether it's a cause and effect. I realize that the question of this morning is relevant to my question.
No, I think this is a very important matter, and I think it makes a difference. However, it's not always clear how you get, these are sort of social changes, how you get them into place. But one thing important to understand is that these things do change. I don't have it with me here, but I've got from a sociologist, from Japan, descriptions. These are Europeans in Japan 100 years ago. So it is a long time ago, but 100 years ago, Japanese punctuality is being described. And it's shocking, the level of unpunctuality. People are not looking at their time for anything. They are landing up late. There are trains that are kept waiting because the driver was having a cup of tea. This is a Japan that you won't recognize with today. When I got this actually came very surprisingly. I was having a chat with this Japanese sociologist who said, I know of some work, then he dug it up, gave it to me. I've used it in a paper. Just to first of all make the point that these things do change. They are not hardwired, and societies today, Japan is probably the most punctual society in the world today. A bit too punctual, but it has changed dramatically. It has got into that. So these things change. One important example which I've seen in front of my eyes, smoking in public space. When this rule came that you don't do that, I thought in India, you will never get this norm to follow. You will have to have policemen standing around to stop them. But this changed in Delhi in front of my eyes. Over a 10-year, 15-year period, the smoking norm has become a part of norm. So these rules do change. Exactly what triggers it off, how you do it, I think we know very little. And one of the reasons for that is in economics, we gave so little attention to these things that we haven't studied about the changes as to how these things come about. But leaders, the point that you made, I think that's very important. Leaders are setting an example all the time. So their own behavior, what they expect of other people, these things begin to change standards. One of the reasons why the World Bank, we went in for this topic on social and behavioral foundations of economic development is in the hope that we will get a better understanding of, we know these things change, how they change, how can we bring about the better changes in society. That is something that we are investigating.
Actually, on the issue of clocks, the story goes that in England, before the railway age, almost every town and village had its own time zone. There was no real reason for them to be brought together until the trains, you needed a railway timetable that worked everywhere. So, any other questions? Otherwise, do either of you want to have a few concluding words, or we just...
Not really, yeah.
No, I think
this is fine, yeah.
So thank you very much.